Welcome everybody to the closing beat. Happy Thursday. God, why do I never remember the days anymore? Welcome. We're financial advisors here at Jazz Wealth Managers. We manage, build our own portfolios, SEC fiduciary, registered financial advisors, and this is our quick show that we do to give you an updates on the markets. 30 seconds. I have to just say this real quick. If you watch the show and you're invested in an index fund, bear with me, in an index fund, you're going to be just fine, right? So don't panic, right? Stay the course. What happens is, naturally, this show is here as a marketing tool, right? We don't spend all this time and prep and everything because we're nice. I mean, we're nice, but we don't spend all that time just for fun. We naturally hope that one day, if you need us, you'll come check us out and give us a call or whatever. But when the markets fall, I always get a flood of people that I notice are in index funds. They're just panicking a little bit. And so as a fiduciary advisor, if you are one of those people, you call me, email, whatever, and I find out that that's the case, know that I'm probably going to push you away. We have no minimums. There's no reason why you couldn't work with us, and I'll certainly do want to work with people. I'm not, it's hard to turn away a customer, but if you are actively watching a passive investment, then it's your fault that you're scared, right? You have to just stay the course. So bottom line is, if obviously if we're attractive to you, of course I'll take you as a customer, but I'm going to give you the honest advice. I've turned away accounts with $500 in them and accounts with $500,000 in them. So just know that I'm going to give you the best advice. You're probably doing the best thing. In the future, if you need advice, your life gets financially complicated, you want the education, someone to teach you, or if you have an account somewhere where the advisor's not paying any attention to you, you're not getting the education, the support, the updates or whatever, okay, if that's what you're looking for, then great. But I just really worry about people that get scared when they're invested in an index fund, which is just fine, but then they go, I'm scared. You do it, Dustin. I don't want that. I want the best for you. So we're going to help you out today by talking about the markets. That's it. I just wanted to point that out. Oh, by the way, Wine and Wealth tonight for customers starts at 8 o'clock. We're going to go over your retirement number. Every customer that comes through the door, I do their numbers to let them know how much they need to invest to hit the goal. We can tweak the goal and all that. Well, tonight we're going to talk about that in detail. That's enough. Sorry. Thank you for putting up with that. I just wanted to mention that real quick about the index fund thing. Okay, stock market. I picked the wrong year to stop drinking soda. I'm a pretty big soda guy. You can tell by the elasticity in my face and everything. I like soda, and I thought, you know what, New Year's resolution, I don't really do that sort of thing, but can I stop drinking soda? We are on day 3 of not having any soda, and it's like, markets are falling, everything's weird. I just feel out of sorts, but let's talk about it. You can see it on the screen there. The Dow down 660 points. That's let's call it 3%, just to round up if that makes you feel better. The S&P down 2.5%, and then the Nasdaq down 3%. 30% of the Nasdaq's decline, actually 34% of the Nasdaq's decline at this point, had to do with Apple. Yesterday, after the close, Apple came out with their warning. We were talking about the markets being lower after hours. They had revenue guidance lower. Basically, the easy way to explain this is they just said, hey, Wall Street, the revenue that you're expecting us to make? Well, we're going to be lower than that, considerably lower than that, like billions lower than that. The earnings per share you think we're going to make? We can't do it. We're probably not going to get there. Our profit margins that you expected, our gross profit margins, we're not going to do it. We're not going to get there. They blame China sales, slowdown in China. They blame the tariffs. They basically just came out in the open and admitted everything. Like, they're transparent with everybody. I sort of think that's cool. And they said, that's it. We're not going to make it. So that immediately hurt the markets there. All the major indices participated in that. You had manufacturing numbers that came out early this morning. They were the lowest since 2016. Yep, 2016. Interestingly, I read through that. About half the people that were surveyed, it's a survey. They do a survey. I think it's 1,000 people. It's not even that many. Maybe 8,000 now. But basically half the people, the manufacturers in that study, reported back that tariffs were starting to hurt them a little bit. So 50% reported that. That's pretty crazy. Initial jobless claims, those came in higher than expected, meaning the number of those filing initial claims because they're unemployed, that came in a lot higher than expected. The number of jobs created also came in higher than expected. That's good news. Excuse me. However, nobody cared because everybody was looking at all the Apple news, all the negative stuff. The market continues to be in a mode where give it one little reason to sell off, and it's going to sell off. So that was the end of that one. Tech stocks, brutal today. Semiconductor stocks, brutal because Apple reported the slowdown. Well, there's a lot of other companies that provide products that go into Apple phones and whatnot, and so those companies all got slaughtered. Believe it or not, Apple was not the worst performer in the S&P today, tech-wise. It was actually one of their suppliers. We'll cover that in a minute. And here's the thing. Look at the chart that you see over here. That's a 5-minute chart of the markets. What we've been seeing is right around the time Europe closes, 11:15-ish Eastern time, that's when our markets, the bulls, really started to gain some steam there. We're not seeing that anymore, right? So we're back to that whole sell the little rips in the market there. And so let's just go through it. We'll cover it all here, working through the different markets today. You got the S&P 500. There it is on the screen down. I will reiterate my comments that you don't sell the first sell off after a climactic decline. See yesterday's video if you're interested in the description of that, which means that this sell-off is not one that gains any steam to the downside. I know it feels like that right now, and it's hard to shake off, but this sort of pullback here has more likelihood of creating a higher low than the previous time before than it does making a new low. So I have zero fear at the moment that this S&P is just going to crater down here to the lows. It could be wild, choppy, and scary in the meantime. But same for the Nasdaq. You don't sell the first sell-off after a climactic decline. So technical traders are really, I mean, it's not fun to see this happen today, but they're really not worried about what happened there today. A little worry there in transports. The transportation sector a little bit lower today. Delta Airlines basically underperformed for the December holiday season. People that booked nobody really booked last-minute flights according to them. You guys were like on it. You're like, booked early. I know where I'm going. I know when I'm coming back. So they had a lot less revenue there, and so that hurt. I believe Delta was down 10%, nope, 9% to finish the day. That's new 52-week lows, and naturally it took down some of the other airlines, all of them with it, but to different degrees. American Airlines down 7, United Airlines down 5, even the regional discount carriers like Spirit Airlines down 7%, and then you have Southwest Airlines, one of the better ones out of the group, only down 3%, didn't make new 52-week lows, by the way. I never, ever talk about this sector, but I'm going to touch on it today. Biotech, one of the standout areas. It was strong for most of the day. It did gap higher. BMY, here, I'll just do it on the chart. BMY is buying Celgene. Right? So Bristol Myers is buying Celgene, if you're familiar with that. Here's how it works, because this is in a lot of different portfolios here. The Bristol Myers is going to pay $74 billion in cash, and whenever there's a cash transaction, for example, in this case, you got BMY taking some of their cash and using it to purchase Celgene. These two companies will go together. I think BMY will just absorb the name. I didn't read that far into it. They'll absorb the name, and they're going to pay $74 billion. Well, what you do is they go factor out normally, what does this take to make that happen share-wise? How many shares will they have to purchase, if it's all in cash, to then go absorb it by BMY? How many shares do we have to buy out of everybody, and what's the total value there? It's actually $122 per share on this deal. But BMY came out, these guys, and they said, we're going to do it a little differently here. They said, we're going to take the company for $74 billion in cash, but we're going to do it this way. We're going to say every person who sticks with it through the transaction is going to get one share of BMY plus a $50 check, or credit to your account. So it's a little bit different of a transaction. It's not abnormal, but it is. We haven't seen this sort of thing in a while. It's very popular in the biotech space. But just know, if you choose to hold on to your Celgene, you will, on the closing date, you're going to end up with one share of BMY and then a credit to your cash balance. It's a little nightmare for the brokerage firms, but they'll get it done for you. Nowhere near making this deal happen at the moment. Right now it's just an announcement. It is not official. It has a long way to go. However, there's really no reason the deal can't go through if you dig through that sort of thing. I really don't like the space, but today the news was there. I had to focus on it. Gilead, also, I don't like this space, but and it's not because I think it's going to go down. I don't like the space because I just don't like it. I don't like the news. I don't understand it. It just bugs me. Interestingly, if you want to be an analyst for one of the big four, and you have biotech specialty with financial background, $2 million starting salary to be an analyst in the biotech sector. They can't find anybody. So if you have kids that are like, I kind of like finance, I kind of like medicine, put them in, go to school. Put them in school right now and tell them to go to Goldman Sachs and be like, hey, I'm a biotech analyst. They will fight over the people in that space. That is incredible what they pay. It's probably even more by now. That was last year, it was $2 million. I got off track. We were talking about Apple here today. That's the biggest news. Lost 10% all in one day. Look, I tweeted this out last night, sort of jokingly. I was trying to have some fun and relax. Apple doesn't lower their guidance, right? They never do that. So if you go back and you look at all the earnings, they never come out ahead of time and say, we don't expect things to be good. They usually don't come out ahead of time and say, we think things will be better. They usually keep very quiet. They just release their earnings. Everything is done. In fact, the last time they did this, I tweeted this out as a joke, Kelly Clarkson was on American Idol trying to win the competition. That's how long ago it was. If you don't know, that was 2002, just to have some fun there. Okay, so Apple lower on the day. Now, I made a whole list here. A lot of you guys know the suppliers, right? There's a lot of common suppliers in the space here. Cirrus Logic, they new 52-week lows on there. Broadcom, there you go. Not new 52-week lows. That's one of the stronger areas, but this is a Apple supplier here, down 9% on the day. Taiwan Semiconductors, that's no need to explain what they do, down 6% on the day. And then some of the littler known brands, Lumentum. This is your lithium providers here. I think they even have a stake in that company, if I'm not mistaken. 7% on Synaptics. And Skyworks. Skyworks was actually your worst performer there in the S&P, aside from the buyout from BMY. Skyworks down 10.65% on the day. So pretty nasty there. We talked about Delta being lower on the day for their deal there with the not having a good holiday there. Gold, you got gold higher by 1% on the day. Interesting day for bonds, by the way. If you follow that, you can now buy, there's an inversion there. You can go with the 3-month bonds and get a higher interest rate than a 2-year bond. Kind of interesting there, huh? Makes you feel like maybe the high interest savings accounts will start to see a little boost in yield. So bond prices, your short-term bond prices, new highs there, and your long-term bonds, new highs as well. Oil, that's 4 straight days up in a row, just to wrap this up. Yeah, 4 straight days higher in a row. However, not very impressive, right? 4 days of besides the other day, 4 days of very little action. And so that's obviously not that exciting. Financials, little weakness here today, just erasing a little bit from yesterday. Really the bulk of the action today was tech. I'll use the XLK just to show you quickly here. Down 5%. Also scrolling down there at the bottom, your semiconductors, 6% lower on the day. That's your worst performing sector in the markets. Transport, second worst performing. Other than that, I get it that the rest of the areas were lower on the day. It just didn't really grab that much attention. It just really wasn't that interesting overall to Wall Street. So what do I have? What do I have? I've covered it all for you. Yep, that's all I got there. If there's any questions, I'll be happy. Yeah, Tim Cook did, he did blame, put the little politics in there. Either way, you know how we used to say, well, I don't know if you've ever heard this, but they would say when China sneezes, the U.S. gets a cold. It's kind of like when Apple sneezes, everybody else gets a cold now, right? I mean, that's the real first time we've been able to see that. That's crazy. So we'll see what happens from there. You want to eat or talk on the phone? I don't know what you guys are talking about. I missed some of that conversation. No problem. If you have any questions, happy to answer them, and then we'll wrap this up. Don't forget tonight, Wine and Wealth for our customers. We'll be here at 8 o'clock Eastern time. We do it every week, by the way. Can you explain the mini Japanese? Yeah. Oh, yeah, overnight last night, the Japanese yen skyrocketed, I believe, by like 3% against the other currencies in a matter of 5 minutes, 10 minutes. So it's sort of joking way to say it was like a mini flash crash against the other currencies there. It definitely grabbed attention in the Forex world, I can tell you that. But that's all. Where'd you see that? Did I put that down at the bottom or something? Little rise in bond yields, not bad. Yeah, no, this is a little bit. This is why. So you notice you didn't see, if you follow financial media, you don't see it plastered everywhere. It's not super important what happened in yields today. It's just kind of an interesting thing. The big sellout continues, but Cato, high or low? If you had to bet, high or low? I could say that because the SEC's closed today. Oh, man. Okay. AMD, that was your best performer in the S&P last year. We got AMD. Well, anything tech-related, didn't stand a chance today. So I can understand that was down about 10% on the day, hovering near lows. I'll keep the same comments I said about a week and a half, 2 weeks ago on AMD. There's no reason for any big money to come into this stock until earnings, right? And so we've got just a couple weeks to go. Late January, January 29th. So there's really no good reason. Now, if AMD comes out and says, hey, things are great, we're killing it, everything's good, okay, then there's your answer. But other than that, there's nothing. We need more guidance on the oversupply in the chips and, of course, guidance on tariffs as well. So everyone's just going to wait till earnings or any update from the company. For that reason, there's no good justifiable reason to believe that if you bought it now, you found the bottom, right? I couldn't say that for sure. I love it. I love it. I love it. I wish the Fed would talk less. Treshawn. I wish they would talk less. I don't think there's a need to have a conference after every one of these things. They used to not do that, by the way. They used to just come out with their rate adjustment. They would put out the little forms. You could read them all if you wanted. Occasionally, they would say a little something. I think they could get away with just being quiet for a while. Just go away. You're messing everything up. Same comments on Intel. Yep. Anything in that category, I would say the same thing. Now, earnings are coming up, of course, but just what's the catalyst? What's the reason for any sort of excitement there? I think you're ahead of the game there. I like it. I love it. One day we'll have to get Financial Investor to be on the show, on the Doe Show or something. Opinion on BMY, already covered it there. Wait, so tech sector is just mostly, oh, you're talking to somebody else maybe. What do you think returns of stocks will be in 2019? Well, the data shows that it'll be a positive year. However, it's not going to happen in the first quarter, so you don't have to worry about that. So we did a class for our customers just to go through and say, okay, this is what happened in 2018. What do we expect in 2019? This is what happened in the last quarter of 2018. What typically happens going forward? Just to go through the whole deal, right? So we know, and I've been kind of just reiterating that to customers, there's no hurry. If you're increasing your weekly deposits or contributions towards your IRAs, don't rush it. You got time. Just keep going. At least the first quarter here, the first half of the first quarter, statistically, is going to be messy. Well, that's all I have for you. I'm going to get ready for our class tonight. More work for me here, and happy to do it. Again, if you're in index funds and that's your goal, that's where you started, as long as you understand what you're doing, you're going to be just fine. Don't actively watch a passive vehicle. If you chose that route, stay with that route. If you feel like you need help, of course, see the beginning of this video where I mentioned that. If your advisor, if you have a larger account or you're out there and doing this with somebody else and they're just not working with you, I mean, I can promise you nobody is going to work more for the individuals here than we do. I just love teaching this stuff. All right, that's all I have for you. I'll be out of here, and we'll talk to you guys later. Enjoy. Thanks for watching.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.